Good morning, everyone.
Hi, good morning, everyone.
Good morning, everyone. Thank you for joining the session today on ONDC Financial Services. This session will be conducted by Mohit. Couple of house rules I want to announce before we begin the session. For smoothly executing the session successfully for everyone, few security controls are in place, such as microphone and videos are disabled for the audience. We encourage you to ask as many questions as possible. You are requested to mention the questions in the chat box at the end of the session by raising your hand. I would request everyone to please maintain the decorum. Any malicious behavior is highly discouraged, and the user causing the same will be removed from the session. You will be receiving ONDC resources such as copy of presentation, recording, and other resources. Request everyone to please fill up the attendance sheet. I have already shared the link in the chat box. Please mark your attendance so that we have your in our database and we will be able to send you the resources. Lastly, this call will this will be a weekly call. So should you wish your team members, etc., can join this on any Thursdays from 12 to 1. Now I request Mohit to take the session forward. Thank you.
Thank you, Janvi. Thanks for setting the context, and thank you all for joining today. Really appreciate it, I think. And this is like a weekly call that we started starting last week itself, right, for financial services. I'll just kind of share my screen, and I think then we'll get started. So the way we'll do this is like first 30 minutes. I'll just quickly cover introduction to our financial services, the key thesis behind it, what we are doing, what's our sort of roadmap there, right? What's already launched. And then next 30 minutes, we'll open up the floor for questions. And I would encourage you to kind of just raise your hands and we could just do it in sequence, or you can type it out as well. And we can take those questions as well there, right? So hope that sort of works with everyone. Okay, so I'll just
With your screen is not visible. Yeah.
Janvi, is it visible now to all?
Yeah, it is. It is.
Okay, thank you. Thanks for confirming, Janvi, there, right? Okay, so we'll start off there, right? So ONDC Financial Services, a quick sort of overview. We've started financial services with the launch of credit specifications in the month of August this year, as the first few sort of use cases, right, that have been launched on the protocol. And obviously, going ahead, we have a ambitious sort of roadmap there as well, right, on the insurance investment side as well. Before we get to the use cases and how we're sort of approaching that, I'll just take a couple of minutes, maybe doing a bit of in attending the weekly ONDC call as well, on the fundamental principles which basically influence the way ONDC operates and how we sort of build out these use cases as well, right? So there are like two fundamental principles, and this cuts across all of what we do, including commerce, financial services, now mobility, all of those there, right? There's unbundling of services, right? That sort of allows essentially a lower cost of acquisition, right? Both for sellers as well as the the buyer applications as well, right? And obviously helps in terms of reducing the go-to-market efforts for either side there, right? So each of what we do is sort of aimed at unbundling, and what we build essentially are like protocols that allow interoperability between platforms or applications. I'll give examples going ahead to kind of explain how we accomplish that. But basically, these two fundamental principles allow more market access, even for smaller players to kind of build platforms and applications, get access to a larger customer base. This actually helps the market participants in these two ways, right? So even in financial services, I think these are the two core principles we operate with. Now, As ONDC, what we build are protocols, right, or specifications, as sort of maybe slightly more technical terms, as we call them there, right? Now, these protocols are, and just to give you an example over here, let's take an example of an email system that all of us are using. Let's say an email client like a Gmail, or we are using our Microsoft Office there itself, right? Each of these are applications, and then on the other side there could be other applications. So, for example, you may be sending out an email from Gmail to a Hotmail system there, right, or a Yahoo system over there, right? Now, what actually enables all of this are sort of a protocol, a standardized rails or specifications that allow these different email clients to talk to each other without really doing a one-on-one integration or a bilateral sort of integration between each of those, right? Now, within the context of digital commerce, right, what ONDC is sort of trying to do is something similar there in a way. Though I must confess that there are a lot of other moving parts as well. So this is rather simplistic view of things here. What ONDC is actually building are protocols that allow different buyer applications and seller applications to talk to each other on a common sort of language, right? Which is where the protocols kind of help. Now, the advantage of this essentially is that an individual seller, let's take an example of a seller who sort of registers with one application or one platform, has access to multiple buyers from multiple buyer applications. So basically that seller doesn't need to be that the buyers that are accessible by the seller need not be restricted by the buyers that are there on that particular application, because essentially now there are multiple buyer applications that talk to that individual seller application on which the seller is there. So that's sort of one. Discoverability is one key advantage. The other is the autonomy in terms of the rules and the terms there as well. That the seller is no longer bound by the rules of a single application or a single platform. If they wish, they can actually always kind of change the platform on which they operate and yet be able to access the entire network on all the customer base, right? That's available via the ONDC network as well, right? So it obviously allows a lot more interoperability, a lot more autonomy for the sellers there, right? Obviously, this helps in terms of better pricing as well, right? Because now we are talking about a lot more efficient, market-efficient pricing mechanism that kicks in because of the way the pricing or commercials are executed in the ONDC context, which is on-the-fly digital contracts there, right? And I'll explain how this sort of is executed in slight more depth over there. But then each buyer application from a commercial perspective is expected to have a buyer finder fee, which is specific to a transaction. And this is sort of broadcasted to all the sellers that are there on the network via seller applications. And then the seller application, in a sense, at the time of transaction itself, at the search phase itself, accepts or rejects that buyer finder fee. So that's a better price discovery mechanism there, right? So that's over time, it will lead to better prices, lower commissions, and better terms for the sellers. Now, for the buyer, there are advantages too, right? And one of the key advantage is obviously is that better commercials will lead to better prices there, right? That's a key advantage. The other one being more choices, right, for the customers, especially in the context of financial services. And let's take the example of lending. There are large segments of customers who don't even have access to credit, easy credit over there, right? Now, this is also likely to kind of help provide basic access to those segments. So there's choice, there's access, and then obviously there are better prices that the customers can actually enjoy over time, as well as the network can scale as well. As an organization, we are a private company, and I know people think we are like government company. We're actually not a PSU, right? We are a private company. We're a not-for-profit Section 8 company. Established by the government of India, right? So we work very closely with DPIIT there, right? So basically, it's kind of a network that we have. We operate, and we sort of work with various buyer side and seller side applications to kind of establish and scale this network there, right? So yeah, that's it. I'll maybe move on in case there are questions before we deep dive into financial services. I'll be more than happy to take now. Okay, so Sujal has raised a hand. Sujal, please go ahead. Janvi, you may have to unmute some of these participants who are asking questions. Janvi, are you there?
Yes, Mohit.
Yeah, so some of the participants are asking questions, so you'll have to unmute them.
Do you want to take the questions now or at the end of the session?
Okay, so then we can just maybe like take the questions. So I would request you to kind of just hold your questions. We'll quickly cover the deck and then we'll take all the questions there. Okay, so now how does sort of having financial products on ONDC network help there, right? And this is sort of obviously one of the key questions that we get asked there. And I think the slide kind of covers some of the reasons and areas that we think are is where this kind of helps, right? So basically, when we kind of establish and build these standardized protocols or digital rails, they help various entities in different ways. To give an example, today in a platformized world where different platforms, let's say buy-side platform, have to integrate with different lenders, then it kind of leads to custom integrations. And obviously there is significant technological development effort required to integrate various lenders or insurers depending upon which platform you have there as well, right? And obviously there is maintenance associated, all of that as well, right? So one of the key things over there, this allows the standardization of protocols, which results in easier integration there, right? So integration costs to go down and maintenance costs also go down there, right? From a lender perspective, the customer acquisition cost reduces as well, because now you have access to a larger customer pool without really spending a lot of effort and money on customer acquisition there, right? It also reduces operational costs because inherently these protocols embed various other digital public utilities such as Aadhaar, UPI, account aggregator, all of these. And I'll explain with the example, right? One of the flows as well. What this allows is that reduction in operational costs, which will further allow satiation of various financial products and obviously increase in access to masses as a result of that there, right? So that's sort of on the cost side. From a market expansion perspective, this allows a larger customer pool now to be accessed because of the costs that have gone down and the supply and demand aggregation on either side. This allows a larger customer base to be tapped into by the lenders over there, right? There are new use cases that I think we've been discussing with the NPs as well, and I think some of them for I would say for tier 2, tier 3, even sort of rural areas as well, which will allow a faster spread of the financial services products over there in these geographies there, right? And finally, there are sort of organizations and I think companies which are actually building on ONDC first, right? So basically it allows organizations to venture into e-commerce or selling online, right? They may be selling offline till date. So it sort of reduces the barriers to entry from an online access perspective. And we do expect that even in financial services, there would be companies that start building ONDC first, leveraging this infrastructure, this digital API infrastructure, and then having an access to a larger market online as well. Right? So these are some of the advantages of what we are doing on the financial services side. Quickly summarizing our, what we have in the planned for from launch perspective. There are 4 broad areas. There is credit, insurance, investments, and then there are additional products such as gift cards. We have already launched the draft specifications for credit, and I think integrations with about 15 to 20 in network participants. Accelerated cohort are, I think it's going at a faster clip there as well, right? Within credit, we have 2 use cases which are already live. There is an unsecured personal loan, and then there is an unsecured GST data powered MSME loan, right, for sole proprietors. So these 2 use cases are already live. In the subsequent phase, we have a purchase financing use case which will be going live. both for the B2C and the B2B purchases made on the network. And then we have another sort of use case, which is more around derived data structure, which basically allows any platform to utilize their proprietary data that could be used by a lender for underwriting at the time of sort of credit there, right? So that's sort of, these are some of those. But I think the idea over here is that going ahead, we'll be doing sort of community discussions where, in consultation with the market participants, we can jointly decide which all use cases make more sense and kind of release those to the market participants. On the insurance front, we have 3 use cases, a motor insurance use case, health insurance, and marine. Marine being transit insurance, so it sort of works both for inland as well as for a kind of intercity as well as an intracity kind of a shipment use case. So these 3 use cases are going to be live. Insurance specifications, we are sort of plan to release these in next 1 week. So a bunch of you who are interested, you can fill up the form, and then we'll be sending out the specifications to you. It will be live on our website, so you can access them in either case there. Investments, we'll be doing mutual fund investments, and I think that's the first sort of area. And then going ahead, we can kind of decide upon other areas, including stocks, gold, and stuff like that there as well, right? And then in terms of the gift cards, we have 2 products live here already. There is a branded gift card, and we have a first set of NPs who are already live, both on the buyer and the seller side, for branded gift cards. These are closed loop gift cards. There is another product which is open loop RuPay based gift card, which is specifically for a corporate gifting or a group buying kind of a use case, which is already live with 2 issuers at this point in time, Yes Bank and Omnicard, and more issuers are getting on board on that particular program. So these products are already live on the gift card front, and I think available to market participants to scale there, right? Yeah, so I think I'll skip going through the flows, because I think depending upon the interest of the group, we can cover the flows, or we can share the flows with the participants, and then you can definitely come back with your views, comments, and share with us there. It's available on our website, so you can access these flows anytime. These Figma files are available. I quickly jump to one of the key questions that gets asked every time there, right? Okay, as an organization, how does one engage with ONDC? So there are broadly 4 roles there. There's a buyer app and a seller app, which is sort of quite apparent based on what we've discussed there, right? So buyer app aggregates customers, aggregates demand. From a commercial perspective, the buyer app actually earns every time there is a transaction or a conversion done, right? In the case of financial services product, and in the context of financial services, buyer apps, obviously they will be under the prevailing regulatory norms. So if you are, let's say, selling insurance, you need to sort of have an insurance brokerage license as required there. If you are doing mutual funds, then you need to be registered as as an investment advisor on an AMFI. I think the standard sort of process, and you need to have it. In case of credit, you need to kind of be, I don't think there's any specific regulatory norm, but I think you need to be under the guidelines of, the RBI there, right? So I think the existing regulatory norms will be there too there. From a seller app perspective, these are in the context of financial services, especially credit and insurance, these are regulated entities there, right? Basically, they are the ones who kind of provide either credit, insurance, investments there, right? So these are sort of regulated entities who can act as seller applications and sell their products on the network. Then there are 2 more roles. There is a TSP role, which is a technology service provider role, which can actually work either with buyer app or seller app, help them in onboarding or other specialized technology requirements that could be to do with their underwriting. They could be to do with their processes, digitizing their processes. So all of these essentially, a TSP brings in that specialization and then kind of works with the buyer app and seller app. The 4th one is a reconciliation service provider, and this role essentially is a role which facilitates settlements of payments between a buyer app and a seller app. So the essential role over here that RSP kind of plays is to kind of create a statement which allows settlement by a third party, right? Maybe I think in the context of ONDC, they have NBBL, an NPCI sort of company, which is a designated settlement agency there, right? So the RSP essentially functions as a provider of settlement construct or settlement files, which allow the buyer app and the seller app banks to kind of settle funds amongst each other on a regular basis itself. And there's a very, very sort of defined protocol around this as well. Right? So these are the four broad roles on the context of ONDC as well as financial services. Seller app being a regulated entity, buyer app, an aggregator of demand and customers under the prevailing sort of regulatory norms, and then TSP and reconciliation provider there, right? So yeah, so I think that sort of pretty much covers it. I think more than happy to take questions now, and we'll be sharing the deck, so you'll have all this content with you as well. Janvi, we can open up the floor for questions.
Yeah, Mohit. So shall we clear the chat history first? There are questions in the chat box.
Yes. Just allow me time to go through. Yeah.
Yes.
Okay, so I see the first question is from Rahul Mathur. Had one question on the buyer's finder fee. In some cases, the buyer app won't know the sale price a priori. Example, insurance premium subject to underwriting. In such a scenario, how do we ensure that the buyer finder fee isn't too large? Rahul, if you're there, maybe you could just give an example, and then we can sort of take that question there.
Rahul, I have unmuted.
Yeah,
I have unmuted. Yes.
Yeah. Thank you, Janvi. Hey, Mohit, thank you. This was a super cool session. So just, since you're looking to enable, let's say, a motor insurance or a transit insurance, marine insurance, a buyer might broadcast a fee saying 100 rupees, is what we're looking for to, let's say, insure a small amount of goods going, let's say, from Nagpur to Mumbai. But given transit insurance premiums are not that large, they might be asking for 100 rupees when the premium is actually only 175 rupees. So I guess my question here is, broadcasting a finder's fee might be very easy in FMCG or CPG, where MRPs are published and available in a catalog. How do we manage this for BFSI? Or unless I've misunderstood this, then I'm happy to be corrected.
Sure. Yeah. So the buyer finder fee, okay, I'll just take an example here and let me know if that clarifies your question. The buyer finder fee, what we expect, while there are both the options available, there's an option available to have a fixed buyer finder fee, as the example that you gave of 100 rupees, or a percentage of the the premium paid by the customer. There, right? So the premium paid is 1,000 rupees, then the buyer could ask for, let's say, whatever 1% of that there, right? I'm just giving an example there. Now, what we expect mostly in financial services, especially in credit and insurance, the buyer finder fee would be a percentage of the premium paid by the customer, right?
And Mohit, just one follow-up there. From an incentive standpoint, let's say I work at an insurance intermediary, and the buyer application here is obviously now being incentivized as on a fixed percentage of premium. How do we handle, let's say, I'm just shooting it out there, malicious intent, which is I have 4 insurers, but I will promote the one with the highest premium, and the buyer application will also be aligned because they would earn the largest commission there. Just wanted to get your thoughts on this.
Okay, so I think there are 2 parts to this. I think one is the insurer part of it, and then the other one is the buyer app find part of it, right?
Sure. Yeah.
Now, as an insurer, after getting the details, so I think there's a broadcast model where you get basic details of the customer, right, in a form. You can actually give your best offer to the customer, and that is upon you completely as an insurer, that what is the premium amount that you're quoting over there, and then what are the terms and conditions. there, right? And you can decide to give, but then you have to give your one best offer, and that's the case in with the credit as well. So as a regulated entity, you give your one best offer. Everybody gives their one best offer, which is then shown to the customer. Now, from a buyer app perspective, yeah, there could be a maybe preference for certain insurers or certain lenders based on commercials or other considerations as well. Now, what they have to kind of do is show all the offers. They can sort them by by certain criteria, right, which is upon them. But they'll have to kind of make the sorting criteria public, and that's sort of part of the policy there, right? So that's broadly the case in the retail, commerce as well. And I think that's going to be there in the financial services as well. I think Sujan has a question. He's raised hand, so we can take it now itself if it's a related question.
Not exactly related question, but I have few questions related to ONDC. So when you say from buyer's point of view that it will have better prices. So just a quick question. Who exactly is paying for a whole lot of your protocol fees, basically, let's say infra fees or all those fees right now? And let's say if right now it is open source and free, will down the line, will it be free? Let's say after 3 years, 4 years, will it be free? And let's say if it is not free down the line, won't it be the case that buyer as well as the seller app both have to pay some sort of fees? Then how do you exactly say that it has better prices?
Okay. So I think the first part of the question, are these protocols free? Right? I think that was the first part of the question.
Yeah, because that is what is said, right? That it is free and open source.
So, okay. So it's free right now. In the context of financial services, definitely we'll have a fee in next 3 to 6 months, and we'll communicate that via circular as well, right? And that's going to be like a nominal fee, which will obviously help us cover our costs, right? We're a private company, we're a Section 8 company there, right? So the idea over there is not to make profits or margins. The idea is to cover our costs and then sustain. That's point number one. The other part over here in financial services for loan and insurance there, ONDC essentially will be charging the regulated entity or the seller app.
Okay.
Okay, so buyer app would not be charged. It will be the regulated entity, and that too upon conversion only. So it's not a lead model, it's a conversion model.
Okay. Can you tell what exactly the conversion model is?
So conversion essentially means that if there is a loan that is approved and disbursed, that is when the lender actually pays the fee to ONDC as well as the buyer app, both.
Okay, got it. Okay, fair enough.
I think there was another question that how does it sort of all lead to better prices for the customers there, right? Now that's an interesting question, and our thesis over there is that more choices, more competition, and more, I would say, access from a seller perspective will lead to better prices for the customers. It's better price discovery rather than monopolizing on platforms or standard rails there, right? So this will sort of obviously lead to better prices for the end customers, and obviously that'll actually lead to better lower commissions for the sellers, and then obviously that'll trickle down to better prices for the customers.
Okay, got it. Now, one more question. Not exactly related to financial services, but here's the thing. ONDC says that it will be promoting all MSMEs and all these things, right? All regional related shops and all such things. Now, a quick question. Let's say all these regional players, या फिर MSMEs or kirana shops, they are bothered majorly about hyper local business. Rather, I would say they are bothered about profits rather than if you go and say to them that we will expand your audience, you will have better network of people. But they are generally not bothered about that. They are only bothered about profits, and their profits will come from your hyper local related things. Let's say 6 kilometers of the whole area. Then how do you exactly convince them to come on your ONDC network? For example, let's say I want to build something related to TSP, wherein I want to ensure that I go to these kirana shops and I tell them ki please come and onboard on ONDC. Now, how exactly will you convince them? Because First and foremost, they are not bothered about the audience. They are bothered only about the profits and their hyper local selling things. Plus, one more follow up question: ki when all these shops comes on your ONDC network, how exactly the ranking algorithm work? Whether there is a cost of SEO? Is there any SEO cost, or like there is a fair chance that anyone can buy from any shop, whichever is listed on your ONDC platform or ONDC network?
Sure. So I think the first one was to do with, let's say, the incentives for the smaller sellers there, right? Right. I think that was broadly the question there, right?
Yeah.
My understanding of what's the incentive for them there, right? And obviously, incentive is a larger access to customers and lower commissions, right? And not tying up with a particular platform and terms and conditions, there, right? So obviously, you operate in a free manner, there, right? So that's the motivation, and that's where we are seeing success with smaller sellers, be it mobility with Namayatri, be it sort of grocery, be it even food and beverages as well, right? With smaller restaurants, a couple of outlets and stuff like that. So we are seeing success with that. So that's obviously there as one of the incentives for the smaller sellers: better access, lower commissions, and following their terms and conditions. Actually having the flexibility to operate there as well, right? The second question was around how do you rank these? So again, going back to the basics of ONDC, ONDC is a network, ONDC set of protocols. The user interface over here is still the buyer application. It's still a platform. And it's upon the platform to kind of decide how they want to rank. They have to make their ranking algorithm public, at least the considerations part of it public on the website. So that's how sort of it works.
Okay, but here's the thing, right? Let's say if Amazon comes into picture as buyer app, or like let's say I'm not buyer app, as a seller app, and then their algorithm works majorly based on SEO. Now let's say if a kirana shop lists this shop on your ONDC network, at that time again, because it will be ranked based on Amazon ka your algorithm, there the SEO cost comes into play, right?
Amazon
Now
seller app or a buyer app in your example?
a seller app, let's say seller app.
No, but then they're aggregating supply. No, they are not really doing they don't have a user interface in that case.
Okay. That could be a thing. Yeah, cool. Got that. Yeah.
Okay, I think I see a question from Anil Sinha, and maybe we can do it in a. I guess it's a question from Anil. Yeah.
Yeah. Hey, Mohit, first of all, thank you very much. Very nice session. So I just wanted to understand this a little bit more detail with, let's say, with an use case. So let's say Paytm here is a buyer app where they own the customer, and I am here is a credit provider, right? Let's say unsecured loan, right? How did it work? So basically now I also have to have a one-to-one agreement with Paytm as well, since there would be many buyer app, right? So am I supposed to be listed everywhere? On the other way around as well, from let's say from buyer perspective, there would be many financial entity who would be there on the platform. So which platform they will show and something like that? How it will work? Is it like a open model, or there has to be a one-to-one agreement outside this ecosystem?
Yeah. No, so the one-to-one agreement is actually not really required.
Mhm.
There, like, I think it could be a regulatory requirement in some cases. For example, in insurance, the IRDAI actually requires the broker to have an agreement with the insurance company. I think that's sort of the current construct there, right? But it's not really necessarily required, especially in lending. That's not required.
Okay.
As you observed over here, the digital contract, which has the terms and conditions, including the commercials, that's created on the fly.
Okay.
And that's embedded as part of the API construct. So you don't have to have an offline sort of contract. You can create a digital contract which is valid in the court of law in India on the fly. And you don't, the concept of listing also doesn't apply, because I think that's a platform whole concept over there. As long as you're live on the protocol, you're available to all the other network participants on the other side that are also live on the protocol.
But what is visible to a end retail user, that will be controlled by the buyer app, right?
Sorry, I didn't get the question. If you could repeat that.
So let's say Paytm as an example, which is a buyer app here. Yeah. And I as an individual going on Paytm and buying something, unless I'm looking for credit, then it will be up to the buyer app, which is Paytm in this case, to show all the possible option of lenders available, right? And they cannot show everything since it will just maybe confuse the users. I wanted to understand how that ecosystem will work. You getting my point?
So you're saying that as a user, let's say if there are 10 lenders willing to lend me for right, and then how will Paytm? So that's the user experience, how Paytm wants to, in a sense, as part of the network policy, Paytm would have to kind of show all the offers to the customer. The user experience of it is something that they can define.
Yeah, so they would have some intelligence to show probably what is more suitable option based on the user data they would have, right? Yeah, so that will be very much in the discretion of the buyer, which is Paytm.
That's basically they have to show all the offers. That's required by policy.
Okay.
Yeah.
So the second follow-up question, since I always thought the ONDC is a government entity, but thank you for clarifying that. But so just wanted to understand what is the role of that private entity. In that case, there would always be one ONDC, or there could be many ONDC in future.
That's an interesting question. Right now, it's one. We are a private company, Section 8 company. It's sort of on a similar lines as NPCI there, right? Yeah, Section 8, not for profit, and we're building public goods.
Okay, got it. Yeah. Thank you very much, Mohit. It's really nice.
Yeah, same here. I see there was one more hand. Okay, so let's go to the questions that were asked in the chat box. Yeah, I think this was Nishant Kumar actually asked, what would be the play between ONDC seller apps and data getting generated there as part of the ONDC e-commerce for a retailer and a lender who could use that data to underwrite a loan? So I think that's a good question, Nishant. So I think my interpretation of your question is that the seller apps will generate certain transaction data, and then could they really leverage that to help underwrite the loan, right? And for their customers, and by obviously the lenders there, right? Could lenders kind of leverage that data? Now that's something that we will be sort of building pipes for in the subsequent phase, right? The credit sort of protocols itself there, right? Sort of the derived data structure that is in works at this point in time, which will allow any platform, right? And I think need not be specific to ONDC seller apps. This could be any platform capturing any sort of proprietary data, customer interaction data, to be shared with the lenders from an underwriting perspective. That will help the underwriters. It could be, let's say, you're doing trading on Zerodha, or you are actually doing we had an example where, let's say, company is actually working with dairy farmers, right, where they are kind of capturing the health of cows there, right? It could be, give an example, riders on Namayatri or Zomato or Swiggy there, right? So it could be any platform having data for any entity which is interacting with them, and then how can that data be shared with the lender from an underwriting perspective? There is a roadmap for that there, right, that we'll be working on. Pratyush Garg has raised an hand.
Hi, Mohit. So a follow-up question on what you just mentioned. So for example, you said there's pipeline to provide this data to the lenders, right? With the account aggregator framework coming in, so will this data be flowing directly to the lenders, or will it be through, say, industry-specific account aggregators, or account aggregators in general?
So that the exact construct is right now, I think that's being deliberated, and I think we would actually also, we are planning to do some community discussions around these. This is also, to be honest, part of one of the challenges that we have in one of the hackathons, the leading major, as well. So I think to answer your question, the construct is yet to be crystallized. It could be via account aggregator, or there could be like different sort of entities specialized in certain industries. So for example, somebody doing this for a dairy industry, somebody else doing this for, let's say, e-commerce, right? Somebody else doing this for food delivery riders there, right? So there could be specialized data providers, aggregators as well over there in that sense as well.
Okay. And, I think that was the next question by Nikhil as well. So drawing parallels to Oken. So I see what you mentioned as the seller app is something like the loan service provider on the Oken framework. So financial services on ONDC and the entities which come on the Open Credit Enablement Network, do they ultimately, have a marriage and they interlink and perform, or will they be operating separately? Because both of them have a very similar user case. The entities involved recognized by different names but performing the same roles. So do they converge eventually?
So I think right now they are separate initiatives. I believe Oken is focused on lending. I'm more focused on MSME lending. That's my understanding. Our focus is more broad-based. We are doing lending, insurance, investments, and gift cards. And then within lending also, we our focus is not just MSME lending. We'll be doing retail and agri as well. So I think right now these are separate initiatives over there. Though similar in the sense, I understand where you're coming from, that in terms of the protocols, in terms of the way they are envisaged, there is a lot of similarity, but they are like separate initiatives.
Thank you.
I think that sort of covers the question that I believe Nikhil had. How is it different from Oken? And then Rahul had the same question as Nikhil. If I am investing in an Oken integration, do we have a simpler mapping for ONDC? So right now, Rahul, to your question, it's a separate set of protocols. This are, the ONDC ones are on backend there, right? So it's a separate sort of protocol that you have to build on. Mukesh Bubna has a question. Google will be offering ONDC core and infrastructure APIs with access to real artificial intelligence technology and Palm API to enhance buyer-seller experience on the platform. What is the role of Google here? Mukesh, I mean, while I don't have a ready answer at this because there's a separate team that's managing the Google partnership and discussions, if you can drop a note to me at this email ID, I'll loop in the folks who are managing this to answer this for you. Naveed has a question for Amazon coming on ONDC as a seller app. In any case, the product discovery is highly rigged on Amazon and favors advertisers. Sorry, I didn't get the question.
That wasn't a question.
Okay. Okay.
That was a comment to somebody who was talking of how Amazon, the marketplace works. I had a different question, if I may, since I raised my hand.
Sure.
Can I go ahead and ask? So this may not be a question. I was wondering how does the OCEN framework support the likes of, say, crowdfunding or a peer-to-peer lending platform?
You mean OCN or ONDC framework?
OCN. Or anything to do with the financial framework?
Yeah, no, but no, I'm sort of I may not be answer that. I may be able to answer that question because I'm not really aware if they have a roadmap there, right, on peer-to-peer lending.
Okay.
Yeah.
No, I asked this because I've had the experience of running a crowdfunding platform.
Okay.
And since again, that was very centralized and controlled environment. And now that ONDC opens up most of these things and tries to decentralize, I was wondering if there are any use cases that have been thought of in this space. You can look at how Keto,
again, yeah, not as yet, but going ahead, we'll be doing market consultations. And in fact, the idea is to kind of do community calls where if we see significant interest, we can actually define some of these use cases and launch those right via ONDC. So yeah, as of now, it's not there in the roadmap, but we can discuss and if there's interest, we can bring that. Right.
And one more follow-up question, if time permits.
No, we have plenty time. Like we have like good 10 minutes to go.
Okay. So this is regards to B2B marketplace that I'm building, and I was wondering how OCEN can help in terms of supply chain financing and invoice discounting for people who are, so since this is a B2B marketplace, the ticket size is anywhere between 4 to 5 lakhs per order, and a lot of times orders don't get fulfilled because the buyer doesn't, the buyer persona, who's the purchase manager, doesn't have the authority to make an online payment. And if there was a facility where based on the buyer's GST number, if he could get the invoice discounted and the supplier immediately makes the supply. Is this use case being worked by somebody?
So we do have a roadmap to kind of build the supply chain or invoice financing use case. As an immediate one, I think we are doing purchase financing as a close follow-up to the unsecured use cases. But I think your use case is not actually purchase finance. It's about, let's say, utilizing the invoices that
yes
like that act as a kind of a lien of sorts there, right?
Yeah.
Now that's something that we will be having in our roadmap. I can't comment for OCEN. I guess your question was more for OCEN or ONDC,
yes.
Right? But with ONDC, we will be kind of building it out. In fact, there are sort of conversations that we're having with Threads to build protocols that allow the MSMEs to do, because I believe the incumbents at this point in time are serving the larger corporates well when it comes to financing. But I think there's a huge opportunity on the MSME side, which
very large opportunity.
Yes, that definitely be the focus. I think I would encourage you to kind of send a note in case you have thoughts on this at ONDC, fs@ondc.org, and
all right, I'll
do
that.
There, right? Yeah.
Thanks, Mohit. Nothing more than this from me.
Thanks, Samit. Anil Sinha and Pratyush Garg have raised hands. Hi, Anil. Go ahead. Yeah.
Yes. So I have one question, Mohit. So do you have any other session where we can deep dive understanding about, let's say, unsecured lending, the entire journey of the customer, what all data point would be available from the platform, financial as well as the KYC? That is one. Second, as a lending entity, do I have an option to take the customer out of the ONDC platform? You getting my point? Let's say for KYC or the financial thing, do I need to, can I take the customer outside of the ONDC platform?
Okay, so question was, do you want to kind of maybe, I think, have a deeper understanding of the flows, product flows?
Yes, yeah.
Right? So our product flows are available on our website. I've just put up the list on the chat box as well. Then, right? So you can go through them, you can comment, you can ask questions, and obviously we respond. If you want like a walkthrough, maybe we can set it up. But I think they're mostly self-explanatory.
That's fine. Yeah, I will go through that. So that is fine.
Yeah. I think the second question was around taking the customer out.
Yeah.
And I just like to make a correction there. It's actually not a platform. So ONDC is not a platform.
Okay.
Right. And I think that's where we started there as well.
But from an end user perspective, I'm just trying to visualize. Let's say again the same case. For example, somebody on the Paytm platform has a buyer site, right? And Paytm has listed one of the options as a lending for personal loan. Then now customer click on that, and now some data will flow to us via API. That's I'm assuming. And then the customer has to do the rest of things like KYC, financial, account aggregator, whatever, right? So where that will happen is that I have to plug everything in the ONDC framework, or I can redirect the customer. I can ask Paytm to redirect the customer on my platform.
Ajay, I would strongly encourage go through the flows once. I think a lot of these questions will get answered there.
All right. Yeah.
We'll do a follow-up conversation on this.
Perfect. Thank you.
Pratyush.
Hi, Mohit. So, in my current role, we have been building a platform which is on our own framework, which acts as a buyer app for credit access to individuals. And then, we also have built the technical capabilities of ultimately tying up with the lenders. So eventually now, if I want to build my platform for the sake of better discovery, on an open network. So one is my option today I see is the ONDC framework. I integrate my APIs, I build my platform on that framework. And the other is that the other option that we see coming up is the Open framework. So I just wanted to understand that from the lender's perspective, right? Is it a competition from their perspective that whichever of these frameworks grows traction, that's where they would want to build their capabilities in coordination with technical service providers, which would be emerging. So suppose, in my current venture, I want to specialize myself as a financial services TSP expert who provides these white labeled solutions, tech solutions. So for my prospective clients, both as buyers and lenders, would it ultimately be a competition between what framework the platform is built on?
I mean, very difficult to comment on behalf of lenders here, but as I see from the ONDC's vantage here, there could be an overlap for certain use cases, but as we discussed earlier, ONDC has a wider focus to multiple use cases, catering to multiple use cases. Plus, there is a commerce aspect where the lenders look to leverage the transactions that are likely to happen on the network as well. So, yeah, I don't really think it's a direct competition. There could be an overlap, and lenders may decide depending upon their focus, right, which one they think they would. As of today, we have, I think, about 30 lenders who have expressed interest, and out of those, 8 of those who have gotten started with integration on the accelerated cohort there, right? So that's the current state of adoption as we see with the lenders.
And on the ONDC framework, no matter the TSP I'm tying up with as a lender to onboard on the framework, my discoverability will be to all the buyer apps, right?
Yeah, all the buyer apps that have enabled that particular category.
Okay. Thank you.
Sudev Rao has a question. Hi, Sudev. Sudev, are you there? I think it looks like he's not there. I think Darshan Singh has a question. Okay, it's the same question as Naveed. Akshay Gautam has a question. If it's in the interest of a broader group, can we discuss the lending use case? Akshay, unfortunately, we are out of time today. We can kind of do a deep dive of the product flows in our next weekly discussion. And the flows are available for anyone to access. I've just shared the link with as well, but I think we can do a deep dive in our next call. Yes, this Thursday call will actually run. This is like a repetitive one. We'll be doing this every week. As an HR platform, so this question is, as an HR platform and product, can one consider the gift card integration? Absolutely, that's possible. I would say just write to fs@ondc.org. I've shared that link as well, and our team will get back to you with more details on this one. It seems Sudev is... Janvi, can you unmute Sudev Rao?
Yes, Mohit, I have unmuted him from my side. He needs
Okay.
to unmute. Yeah. Since we have a short of time, Mohit, we can... Okay.
No, I'm sorry about that, Mohit. I didn't realize I need to unmute at my end as well. It's been a very interesting session, though I don't understand much of it because I'm not a tech person. But however, we're building out an HR platform, and I can see some possibilities in terms of adding value, in terms of many HR and management give out, say, gift cards to employees. And so one is whether we can create an integration for that and what kind of category registration required. Similarly, employees also year-end, they keep doing investments, say insurance or some mutual funds, etc. And this becomes part of their saving proof and taxation from a payroll perspective. Whether integrations in the application itself can be enabled wherein they can utilize this and complete their tax savings investments. Two questions in that for you, Mo.
Okay, so yeah, I think interesting use cases, and thanks for giving that context today. I think the gift card, as we discussed earlier, we have broadly two sort of gift cards, one a brand specific use case, closed loop gift cards, and the other one more open loop. I mean, you can just write to us at fs@ondc.org, and we'll share more details. I definitely see an opportunity there that you could leverage these offerings if you want to build like a buyer platform of sorts there, right, for gift cards. I believe you already have one, right, with the HR platform. The other one being investments. Now, for that, yes, you will need to have an ARN number. Just be like, I think, just from a regulatory perspective, which I think is something that you'll have to kind of look into. But yeah, I think that should be a possibility where you could actually leverage the ONDC rails over there to build investments, mutual funds, maybe in future other areas as well that they'll come up with, right, and offer to your customers. I don't see a reason why you can't build that out. Absolutely, you can do that.
In fact, in some of the blue collar or gray collar workers, this unsecured personal loans of smaller tickets,
yes,
there is a popular need, whether it can be a gateway for that as well.
Yeah. So I think maybe we can sort of discuss this separately. You can send a email, and then our team can reach out to you to discuss this.
Sure. Thanks so much.
Yeah, there is a form. So I think for all of you who are there in the call, there is a interest form available on the financial services page itself. It's a network participant profile form. I would highly encourage you to fill that, even if you are in early stages of evaluation at your end. I think that just gives us a sense of the kind of interest in the market and helps our teams plan better. So I've just shared the link here. You can fill it up. Okay, so thanks all for joining today. I hope it helps. We will be sharing the recording. Okay, I think there's another question.
My question is specific to investments product. Who can become a seller? Is it just the fund houses, or any distributor or agent can also become a seller for selling, let's say, mutual funds? And also, if you can spend some time in terms of how the commission will be calculated for regular and direct funds. Yeah,
sure. So the seller in the case of mutual funds would be the asset management company, the AMC. There is a seller app in mutual funds as well. So I think the first seller app that's coming on board is the mutual fund units. It's a consortium of all the AMCs in India, mutual fund units. So that sort of seller app aggregating all the AMCs there, right, on the sell side. On the buy side, you basically will have brokers or distributors, as we sort of call them in the context of mutual funds. So the distributor essentially would be on the buyer side, buyer app side. And the commission in this particular case follows a similar construct. There will be a buyer finder fee, which will be broadcasted by the buyer application. And that will be a percentage of the investment that's made by the investor via the buyer application. So the buyer finder fee would be paid upon conversion, which is once the investment is done successfully by the investor.
Okay. So for mutual funds, I thought it was a little regulated, specifically for I think direct funds. So I was just curious
so the
how
existing
this
regulatory, existing regulatory norms. So if there's an upper cap there, so that will apply. So the buyer finder fee that is broadcasted will have to be compliant with the existing regulatory norms.
Okay, thanks. Thanks, Mohit.
Okay, then thank you everyone for joining today. And we will be sharing all the content with you. I've shared the link of financial services page as well with everyone. And I would really urge all of you to fill up the form, which has been shared as well. So that just helps us plan better. And thanks everyone for joining. Have a good day.